There was a particular note coming from Wells Fargo that caught everyone's eye. I know it caught yours too, saying basically if we're in a recession, no one's told the consumer. Do you think that the consumer is resilient in this current environment?
Thanks for having me. It's a pleasure to be on the program. Absolutely. We at Forerunner, really believe in the resiliency of people. We hold people at the center of everything we do, and we're optimistic about the future. We saw consumers be incredibly resilient and adaptable during the pandemic, and we believe that will hold up, through this economic backdrop and in the long run as we think about the next decade ahead.
Why?
You see consumers spend levels are high. The sentiment, on the other hand, is low. They're really taking in what's happening right now, and they're adapting, and they're taking precautionary steps. So we're hearing about, 39% of consumers are, excuse me, are creating a budget. 26% of consumers are creating a savings account for an emergency fund. They're beginning to make changes, certainly for lower income consumers. We saw this with Walmart coming out this week and lowering their profit target when consumers are shifting dollars from discretionary categories like apparel to categories that are more necessities like food. So consumers adapt. That's their resiliency, right? They may face tough times economically, personally, or at a macro level, but they adapt.
Yeah.
And that's where we see the resiliency coming in.
Jason, also many have talked, there are different types of consumers out there. There are the consumers that at the moment are facing, a balancing act they cannot win. Groceries cost more. Gas costs more. They are going to have to curtail their purchases. But then there's the more luxury end purchaser who is able, despite perhaps their 401k falling off a cliff and despite some of their stock prices having been damaged, are still willing with the pent-up demand to be traveling, and therefore your portfolio company Away comes into my mind's eye, or still willing to be buying an Apple iPhone or an Aura ring, which perhaps costs a little bit more. Are you thinking that this consumer is bifurcated?
Absolutely. I think that that's true right now. I mean, I hope we certainly have our eye towards opportunities that have the lower income consumer in mind, and increasing access, increasing costs for them. But I do think that we are experiencing that. I mean, the reality is that this is a complex and dynamic time for consumers. As we mentioned before, spend is remaining high, sentiment is low. On the one hand, consumers want to get out there and live their lives coming out of the pandemic. They want to eat out. They want to travel. On the other hand, they have inflation staring them in the face, and their dollars aren't going as far as they used to.
Yeah, I've heard much view that actually this summer they'll do it. This summer, they're like, I am just caution to the wind. I'm getting on that flight. It costs me a lot. But people are already buying. For example, Walmart said, look, we think that the shopping period for the September return to school is actually really good. But my worry is I'm the parent. I'm looking at Amazon Prime Day and buying my kids their lunch boxes because I don't want them to get more expensive. Are people buying, stocking up now, and then perhaps into the winter and in the fall, that's when we start to pull back?
I think that there's a possibility of that. At this moment, we're seeing a shift in spend from durable goods, these one-time replacement purchases that people made during the pandemic, and they're not putting dollars towards that anymore. They're thinking about things like back to school, like travel, some of the services that they didn't get to spend on in the last couple of years. With that in mind, very much so, though, do believe and see that consumers are taking precautionary steps, and they will start to pull back. For the middle income and upper income, we haven't seen that effect yet. For the lower income, we have seen that. And to your point, in the back half of this year, that's something that we have our eye on for sure.
And we're looking at your portfolio at the moment, and Chime is one that comes to mind. And of course, you were talking about how the consumer is wanting to save. You're seeing a change in the way in which they're wanting to have savings for emergency rainy day funds. What about just a desire to be in the market, a retail investor, one that wants to be seeing and building wealth? How are you thinking about that from a fintech perspective as well?
There was a lot of energy around that, of course, over the last couple of years. I think the reality has set in. There's plenty of individuals that got burned that were chasing what I see as a free lunch, and there just isn't a free lunch. And so the realities are setting in. I'm hopeful that consumers will want to continue to participate as retail investors. I think that is important. Increasing access to new categories of investments. This is critical for broad wealth creation. That being said, chasing the trends, people are feeling the pain of that right now, and I think that will probably color and shape how they invest going forward.